Today I'm gonna dive in even deeper in the topic of pay-as-you-earn scheme and a general tax rule, because I think it's very little information in English that is available in Norway right now. This video will be super useful for people who is traveling between two countries, who wants to work in Norway part-time, who have two residents, also for all newcoming expats. First, let's take a quick look at most important nuances about both of these tax rules, and in the second part of the video I will name groups of people who cannot use pay-as-you-earn scheme as their tax rule choice. First of all, let's think, are social security important for you? Is it important for you to be able to get jobless money, parental leave money, sick leave money? If you want to receive all these benefits from Norway, then pay-as-you-earn scheme is not for you. With the pay-as-you-earn scheme, there is also no discount on the taxes in December. As with general tax rule, you will have to pay 25% taxes of your vacation money in June when they're coming. So for people who tax under general tax rule, vacation money is tax-free, but for people who is choosing pay-as-you-earn scheme, you will have to pay 25% of this income also. So with pay-as-you-earn scheme, you cannot ask for deduction for commuter expenses. It means when you're traveling between two countries, something that is already not covered by your employee will be not covered by deductions of the taxes. It's basically very hard to get covered some expenses related to work with pay-as-you-earn scheme when you're commuting. And with general tax rule, for example, you can ask for all these deductions when you fill out your tax return report next year. And next on is reimbursement. It's a very important nuance to think about, because with pay-as-you-earn scheme in general, you cannot get a refund of overpaid taxes. And with general tax rule, you get a tax return report next year where you can make adjustments to it. There is two exceptions to refund your taxes when you're under pay-as-you-earn rule. First of all, in a period of 3 years, so we're talking 3 years back in time from the first year you was working in Norway, you can ask for reimbursement of 8% taxes if you was paying social security membership in your country. In the last video I covered that with pay-as-you-earn rule, this 25% taxes you are paying, 8% of them are basically membership in a Norwegian social security system. So if you're already paying that in your home country, you can bring the document to NAF, or send it to NAF or tax Norwegian administration about paying it, and then you will get deducted 8% taxes, so you will pay 17.1% instead of 25%. So if you forgot to do it your first year, then up to 3 years back, you still have right to send this documentation to Norwegian Tax Administration Office and get your taxes back. So the second exception when you can ask for your taxes back or part of your taxes back is simply when your employee over-reported your salary when they were delivering documents to state. Last thing I want to mention is, since 639,000 kroner is the maximum amount of money you can earn in Norway, it's a big benefit of using pay-as-you-earn scheme, because you can have second income abroad at the same time that will be not taxed in Norway. As I said previously, unfortunately there is some groups of people that cannot use pay-as-you-earn scheme, and there is also some nuances of how you can go from one group to another real quick. First group who cannot use a pay-as-you-earn scheme is people who work at the sea, so it's seafarers and fishermen. Then persons with their own business in Norway. Of course, people who earn more than 639 kroners a year is automatically out of this group. Then it's the people who have taxable income from real estate in Norway. So if you have some properties in Norway, you are not allowed to use this rule as well. And the last group, it's of course the people who is already tax residents in Norway. I want to deliberate a little bit more on the last three categories. So it was people who earn more than 639,000 kroner, people who's already tax residents, and people who have some properties and interests from rent, for example, in Norway. In case you were not a tax resident in Norway but then became one, which means you overstayed your welcome. You overstayed 183 days in 1 year. In the 12 months period, as we know, you're automatically falling into the general tax rule from your pay-as-you-earn scheme. What happens with these people is that you can actually keep pay-as-you-earn rule until the end of this calendar year that you were working in. For next year, you need to choose a general tax rule if you're staying in Norway. So there is a bit layers on top of it if you overstayed, and at the same time, on the moment you already had some capital income from Norway or abroad country that are more than 10,000 kroners, you will have to switch to general rule and fill out your tax return report next year. With the capital income, I mean rents on your properties, maybe interest from shares, dividends from shares that you own. If you get paid more than 639,000 kroner, what happens here is that you automatically falling out of the pay-as-you-earn rule and you become a part of the general tax rule. And here what's happening with your taxes that you already paid is that they're going in advance tax in your tax return report that you're gonna receive the following year in April. Guys, I hope everything I said made sense. If you have some questions, you can hit me in the comments. Also, don't forget that you can subscribe to my membership in Patreon. I will get a link down below. There I break down all these topics in more details with more examples, so maybe it's a bit easier to comprehend. Thank you for watching and subscribe. One important thing about these traveling expenses, it's a bit tricky in Norway because there is something called business trips or professional stay, and there is something that is called commuting, so commuter stay. With the pay-as-you-earn scheme, you cannot get deductions for commuter expenses. So when you have a longer stay in Norway, let's say 5 months, it doesn't count as a professional stay or business trip. What is count as a professional stay, it's more when you're traveling to work in Norway for maybe months or 2, you're staying in hotel, your employee is paying your cost of living on top of your salary. Also, you are not obligated to put these expenses in a total amount of money you earn. And with pay-as-you-earn scheme for people who is commuting, so let's say you have 2 residences, one in Norway and one in your home country. For example, you have family in your home country and you stay half year here, half year there. It cannot count as a professional stay anymore, and therefore the expenses that will be paid for your stay in Norway by employee is counted as your income. So what's happening here is that for people who staying a longer time in Norway and has lower salary and maybe higher cost of living here, I would advise to use a general tax rule because you can get deduction on all your traveling and stay expenses. For 2024, this was 83,000 crowns maximum that you can get down. Also, with the general tax rule, these expenses will not count as a part of your salary. So you also will save a lot more money there.